Hello all, welcome to our channel InfoCafe. In this video, let's see the topic of foreign portfolio investment. You may wonder, why do we need this particular topic at this particular time? Yes, there is a reason. It has some significance. Let's see what is it. If you come across a newspaper or news channel recently, you definitely look at this particular headline, foreign portfolio investment exit from Indian market. Yes, it happened. As a result, in a week itself, in the last week of June itself, it incurred around 42,000 crore loss in our market. It's not good news, it's a grim situation. Let's have a detailed analysis of why is it happening, what is the impact of FPI in Indian market, what is the impact that if FPI is going away from the Indian market, and what's the difference between FPI and FDI, everything in a crisp and detailed manner. Okay, so why is it happening? The primary reason is US Federal Bank, like our RBI, Reserve Bank of India. In US, the central bank, we call it as US Federal Bank. That increased the interest rate on bonds. Why is it increasing the interest rate on bonds? The primary reason is globally as well as in United States, the inflation rates are going very high. It's skyrocketing actually. So it's very essential to bring back the inflation in a controllable manner. So this US Federal Bank increases the interest rate on bonds. What happens if the interest rate on bonds increases? Definitely, bond price may go down. Finally, bond yield will be very high. As a result, the foreign investors, especially from investors from United States, bringing back their money from our market and keep it in the American bank itself. That's the motive also for increasing the interest rate on bonds. So that's the reason we are incurring loss also. And it is estimated that in the last month itself, that is in June itself, June 2022 itself, it costed around 2,67,000 crore loss in Indian market because of pull out of money by FPI, that is foreign portfolio investors. Okay, let's have a detailed analysis of what is FPI, what is its impact, everything. FPI, from the name itself, you come to know it's a foreign portfolio investment. It is nothing but investment in a capital market by a foreigner. So it's like agreement on buying and selling. That's it. Market means it's one side is buying, another side is selling. That's it. So here we are buying the securities of foreign countries like bonds, stock of foreign countries. Since you are buying, they need to pay. That is, the investor needs to pay for this particular foreign securities bonds in terms of dollars. So it's an exchange of securities and dollars. That's it. So as a result of buying the foreign securities like bond or stock, we are getting more and more amount of foreign currency, especially dollar. I'm speaking in point of Indian as well as in American point of view. So because we are globally trading everything in terms of dollar, I'm taking a currency called dollar. Okay, fine. I'm comparing with rupee and dollar. That's it. Generally, this type of foreign portfolio investment money is considered as a hot money. Why it is considered as a hot money? Generally, any type of money we can call it as hot money if there is a problem in money or if there is a problem or destabilization in the money, completely rattle the whole economy. In the sense, we can call those type of money as hot money. Of course, FPI also come under the category of hot money. That's why we are witnessing a little bit of grim situation now. And also it is considered as a short-term investment. I'll come to the point of FDI, that is foreign direct investment, in the later slide, and we will see the difference also. Since it is a short-term investment, at any point of time or even after the maturity of a particular time period, short time period, the investor can take away their money. So the transparency is very high here. So these are all the things you need to understand about FPI and what is the benefit of having the foreign portfolio investment. From the name itself, it's a portfolio investment. So there is a big advantage for the investor to diverse their money in different portfolios. For example, let's say there is a investor from United States. he is investing a share of a particular money in gold and another share in real estate and another share in some other domain. So such diversification is allowed in different portfolios. Anyhow, in our point of view, we are receiving dollars. As a result, forex is growing. That's what we are getting more and more international credit. If we get more, if more and more foreign currencies are coming into our market, means automatically appreciation of our local currency happens. That is, appreciation of Indian rupee will happen. But we will see the concept of appreciation and depreciation of money in the next slide. Anyhow, these are all the primary advantages of having a foreign portfolio investment in our market. Let's see what is appreciation and depreciation of our currency. I'm speaking everything in terms of rupee versus US dollar. Why rupee versus US dollar? Because we are globally trading everything in terms of US dollar. If there is a global market, we are purchasing something in terms of US dollar. Globally, I'm speaking. So that's why we are comparing these two things. Suppose, let us assume that the value of rupee against a single dollar is 73 last week. That is $1 equal to 73 rupees last week. Let us assume so. Today, it become $1 equal to 77 rupees. Literally, you can see there is an increase in the rupee value from 73 to 77. Actually, it is a depreciation. It is not an appreciable thing. Okay. When we have a situation $1 is equal to 1 rupee, then we have equal weightage with the dollar also. Then we can say that we improved a lot. At that time, we can say it's a clear appreciation. But for a single dollar, if rupee value keep on increasing in this sense, that is really a depreciation. That's what happening now. The main reason is because of FPI pull out from our market, the depreciation happens. As a result, the value of rupee against dollar keeps on increasing. What is the impact? There are, of course, negative impacts are a lot. Let's see one after other. Recently, RBI announced in its report that overall FPI share in the capital market of our country is around 19%. Because of this sudden exit, we incurred a huge loss. As I said in numerical value earlier, in a week we incurred around 42,000 crore loss. In a month itself, it is like 2,67,000 crore loss. Definitely, there is a negative trend in the stock market. If you witness the trading concept in stock market and also the NSE or BSE index, it's getting down due to this particular reason. And since they are pulling out their money, definitely there is a reduction in the forex reserve. It's a cyclic ripple effect. If the reduction in the forex reserve in this sense, automatically depreciation happens. Our rupee get depreciated against US dollar. That's why if you see in news, the value of Indian rupee against US dollar, it keeps on increasing because we have less forex reserve because of this particular exit. And if we want to import anything from the foreign country, we need to pay a lot in terms of US dollar. So input cost is very high. So if this scenario is happening, it will definitely infuriate inflation in our country also. So something should be done to control this kind of aftermath of FPI exit. Now let's get into the difference between FDI and FPI because both are foreign investment. That's the one similarity. Let's see what are the dissimilarities. Actually, FDI is a foreign direct investment. It's like building or creating the infrastructure from the foreign country. But FPI is simply buying the foreign securities like bond or stocks. So that's the prime difference. As I said earlier, FPI is short term in nature, but FDI is not like so. FDI is long term in nature. And the diversification, it's very less in terms of FDI. But in FPI, investor can go from one portfolio to other portfolio quickly. But that particular case is not there in FDI. So that's why we don't call FDI as a hot money, but FPI is a hot money. Why? Because if the sudden pullout of FPI means it causes destabilization in the economy. We have several severe aftermath. because of FPI exit. So that's the reason FPI is said to be a hot money, FDI is not. Okay, so these are some of the few differences between FDI and FPI that we should consider. So now comes the quiz. You just look at the question, why FDI is not called as hot money. There are 4 options there. You look at it, you try to find out the right answer and put it on the comment section. And also if you want some more topics related to your preparation and listen, just post it on the comment section. I will go through it. Thank you for your patient listening. We will see in another topic in next day. Thank you.